In today's video, we'll be taking a look at how to spot opportunities before they enter their participation phase. We'll also be talking about the latest news in light of what Jerome Powell just said about the markets and our technical analysis levels for the S&P 500, Nasdaq, Tesla, AMC, gold, dollar index, and more. I tell you what, there's a lot going on. We're in earnings season, and I'm thinking it's a buy the rumor, sell the fact kind of earnings month. Let's take a look together right now. Stay tuned. All right, community. Well, this begins our recap for the markets that ended 14th of July, 2021. And straight away, I see something a little bit worrying here. I can just see it in the heat chart. What can I see? Consumer defensives started moving up. We know that's a defensive area, and therefore it usually means the market is starting to rotate out of growth and go into, a sector that's a little bit more protected. I also noticed something else that's a bit worrying as well, which is that Apple, Microsoft, and Google were really leading the charge for the day. And what this means is when we take a look at the actual sectors, the indices themselves, while after Jerome Powell's speech, we didn't see too much movement, we basically have a very flatlining kind of S&P 500 Nasdaq, and we've got a very weak looking IWM Russell 2000. We also have no strong sectors here usually, except for the defensive sectors, utilities, consumer defensives, and a little bit of technology, specifically Apple. So is this a true representation of a market that looks healthy, or is this a market that market is basically rotating out of, and we're seeing just strong movements into earnings season for specific stocks, followed by a sell the fact kind of event? So as traders, as investors, we always need to know what the Fed is talking about. And of course, Jerome Powell is the most powerful man in the world in many ways at the moment for the markets. And I think yesterday when he was talking, he said something pretty interesting. And that was this bit here. Inflation has increased notably and will likely remain elevated in coming months before moderating, Mr. Powell said in the opening remarks. He later acknowledged that the incoming inflation data have been higher than expected and hoped for. But he said gains were coming from a small group of goods, which we talked about, and services directly tied to the reopening. So what this means is that the Fed is aware that the CPI data is, of course, a little bit higher than they expect. They hope it starts to taper, and as long as it does, as long as it starts to decrease, they won't have to make necessarily a move. They won't have to actually make any changes to their current monetary policy. We've talked about slight misses and hits being the optimum level that we want to see for most economic news at the moment. So we actually want slight misses if you're a big favor of the bulls at the moment, because this will mean that for a longer period of time, the Fed will keep the injection of cash, the injection of monetary policy coming through. However, if we get too many more of these CPI datas or data points that are way over expectation, that is not going to be a positive for the bulls in the market. So this is just one of many, and it's about stacking as many as possible together to get a clear picture. Price action will show us the way, and that's why we do the technical analysis. So let's get straight into it and talk about the dollar index. The dollar index remains an enigma to me, and I think a lot of the community here. We have our clear short zone, which is around that 92 area. If the market does come back down, that will be a triple rejection with 3 wicks. The 50 exponential will have been held, and of course that's a very bearish sign. From a bullish perspective, what are we looking at? A closure above this 50 exponential for the weekly, and then hopefully a movement on past this kind of 92.80 area, and then that should move to 93.50. So look, we've got some clear areas. We're in the point of indecision, and when you're in a point of indecision, like we said at the start, you don't necessarily want to be trading. If you're a scalper or a very fast trader, of course you can realize, oh, I'm in a range, or I'm in a range-bound market, I'm going to trade within that. But if you're trying to do swing, that is not the market you want to be getting involved in. You'll get absolutely slaughtered. Speaking of swing, we are certainly in swing in the 20-year bonds, and we've been watching these very closely. I made an argument the other day that I thought the return for the 20-year bond over the next month might actually be better than the S&P 500. And that's pretty crazy when you're talking about percentages, because of course what that means is that bonds are moving at a higher rate, which they traditionally don't do, than the S&P 500's overall growth. So we've seen this daily 20 exponential being a really good buy zone for the TLT, the 20-year bonds. It certainly was again, and the bonds rallied after the Fed's speech, and they continue to go up. I treat the bonds as smart money. I treat this as where Wall Street truly is parking the cash. And if you need any evidence, go and have a look over here before the pandemic. The bonds started rising, the stock market rose at the same time, and the bonds went out of control coming into the crash. Remember, it was preempting. Copper and bonds preempted the crash. That is something you want to keep in the back of your mind. If you want to just remember in the future, if you see the bond markets, which can be tricky, moving ahead of what you could see as being a big problem, maybe that's telling you something that you need to start scaling back. You need to start putting protection in place. The bond market is smarter than people think. And we do have a beautiful base here. Trough, peak, higher trough, and of course, a clear above that zone, which is causing quite a lot of bullishness. Now, I'll be watching this. I've mentioned it quite a few times. I'm looking for the daily to get above the 200 simple moving average. And when that occurs, if we're still seeing strength in the market, as in the S&P 500, the Nasdaq, I'll be definitely looking at short potential, short protection, scaling out, that kind of stuff. This is exactly the type of thing that you want to be looking at in the market as a trader and investor right now. The other one is gold. And we talked about this. I put a video out there, which maybe I'll tag at the back of this video today, talking about stop hunts. And this is a classic stop hunt over here. Go watch that 3.5 minute video. Help me out as well. But at the same time, it really shows you an excellent stop hunt and how, when that reverses, the power of the participation in the opposite way. Think of it as this way. When you get a stop hunt, what that does is it also executes a whole bunch of shorts. Those shorts then get stuck in a position that it fully reverses, and a lot of those shorts have stop losses above here. So it's a double whammy. Not only are they taking out the retail buyers down here and really crushing them, but then they crush all of the short sellers that had orders down here, and then they crush them with their stop losses above here. So that's when it powers through this zone. It's usually incredibly powerful and incredibly quick. Now, you'll notice gold's on the 200 daily, which is definitely a resistance zone for it. So I expect a little bit of a pullback here. But if we go back to the 2 hour, let's just have a quick look at the price action here. Bullish hammer, indecision long leg doji, decision made, and an absolute powerhouse candle after that. I mean, this candle is serious business. This is the type of scalping dream that you look for, or day trading dream. And it doesn't happen that often, but when you have indecision at the peak after a stop hunt has clearly occurred in the market, you know that all of those shorters that were down here, a lot of them will have stops above here. So as soon as you trigger a higher point, it just makes logical sense. It blows it out. Huge amounts of buys come in to crush all those short sellers, and then all of those guys lose money, and then of course you get the pullback. It's just a very nasty game, but this is actually being played out. It's a war between the bulls and the bears, and you can see it in the charts at this stage. So for gold, my expectation now is around 1840, 1843 kind of zone. I do expect a pullback here, maybe down to the 20 exponential would be pretty nice. So like maybe down to this 2 hour 20, hits like an 1820, 1818 level, and then hopefully bounces off that zone. But it's looking pretty positive towards the 1842 now. I'd definitely be more bullish than bearish on that. Let's move over to the stock market before this video gets too long, and I want to talk about Tesla. Very disappointing day here for Tesla. I was actually optimistically bullish here for, I think, a lot of good reasons. We get a long leg doji, and again, if you're going to trade these types of things, I guess you got to be watching the charts. We get an indecision candle, and unfortunately, we get a decision down by the end of this 2 hour period. You can see here the close below, which triggers further sells. Tesla's been incredibly hard to trade in many ways. You know, you could say, oh, well, I just short up here at the top, Tom, and I buy down here at the low. And yeah, they're the two major kind of levels, but I would have liked to have seen that 670 hold up, and I would have loved to have seen a bullish movement. You know, if you reverse this and put a bullish candle here, wow, it would have, you know, really started the flog to 700. And I'll maintain exactly what I've always said, which is you get above $700. I think that's where the true participation is here for Tesla. But yesterday was all too much. The hyper stocks were down across the board. And next stop for this could be all the way back down here at the 630 now. I don't see it really picking off this level, but you know, anything could happen. I would expect more 630 to be reached by Tesla at this stage. Let's move over to AMC. Now, this one was a disaster, and I guess we did expect it. Unfortunately, AMC continues its weakness. It continues its downward sloping fear momentum. You'll notice it had a little bit of conjecture around this low. It tried to buy up, tried to create structure, failed to do so. I think there's even further downside pressure here on AMC. It dropped 15% yesterday. I don't see it really being bouncing until maybe like a 30, 32, which is still quite a few dollars away. And on top of that, if you do get underneath that 30, where's the next level? It could be 20. 20 is the next kind of psychological zone for it, or at least like a 25 or something like that. It's not looking healthy. At these points, when you get this kind of sell-off, I usually don't try to buy the dip. I usually wait for some consolidation, just like we had previously. AMC and GME, I'm not saying they're out. They're not down and out. It's just now they'll come back when you least expect it, and now they'll go and create some kind of market structure. We'll keep following them when it's necessary to do so. Let's move over to the market indices now and have a look at these. So straight away, QQQ still hasn't reached the top here, but Apple was insane. Like Apple did 2.41% yesterday. That held this thing up. If it wasn't for Apple and Microsoft, where would this index be? It almost got to a new all-time high, failed to do so, and shorted off. And you can see the bearish candle here. Gapped higher, shorted off. I don't see this as a negative yet, okay? Because you need a lot of reasons to be negative. We've still got our 4-hour 20 exponential completely in play. For anyone that's going, I'm calling the peak here, they're probably a very good guesser, and they're not necessarily somebody that, I think will get it right that often. You have to wait for confirmation whenever possible, guys. And I'm not saying that I'm not getting bearish here on the market. I've talked about how I don't expect much more bullishness left in these markets. It's a matter of percentages left here. We're talking 2-3% on the S&P, 2-3% on the Nasdaq before I expect a healthy pullback. So if this all plays out, I could see why people are going bearish here, but let's take the facts. The facts are price action is up. The facts are the 4-hour 20 is still up, and that's how we have to look at it. So hopefully we get a bounce here in the early session, and you would think previous resistance acts as a little bit of support. Let's go to the 1 hour here. Yeah, it makes sense that this is the point where you want to see a little bounce. Otherwise, we go deeper. We go and hit that. Of course, on the 1 hour, it would be the 50 exponential, and we find some bouncing. So if we don't do that, hey, we go to the 50, get a little bit of a bigger pullback. Everyone panics, and then hopefully we see more rallying. I find it hard to believe that the QQQ, that in general, all of these indices will bust off before earnings. I feel like it's a buy the rumor, sell the fact earnings, like we saw with the banks, where the banks came in, knocked it out of the ballpark, but because the optimism, the expectation of Wall Street's so high, it's trapping all those retail traders in. And you know what makes me even more convinced, everyone? It's got to be to do with the stocks. Apple's firing, Microsoft's firing. These stocks are the ones that we know retail traders get in hard on. I'm sure many of you out there have Apple. Congratulations. Well done, guys. It's running well. We've talked about it. We talked about the breakout. It's an exceptional stock. However, imagine how many people will get hyped into the earnings season. You don't want to be like that. If it's moving towards a resistance and you're about to see earnings, do you think it's going to be able to maintain that price? I find it highly unlikely. Let's move over to the Dow here. It's on support. You'll notice a little long leg doji here. So another indecision kind of at the peak. We get a little decision made, bullishness here. I expect actually some nice participation to enter into the Dow. So we'll keep watching that one, but it is on support. I hope it bounces over the next 24 hours into the Friday session, which it should hopefully do so. Obviously, Thursday, Friday session, we've got Jerome coming back out. We've got some extra US figures. It'll come down to the news. But yeah, things are still looking relatively bullish here. Go over to the daily on the S&P 500. Definitely not as good as the other two markets. 2 rejections now. Again, another long leg doji style candle. We're looking for a bullish breakout that will get day traders excited, and they'll start pushing up. And again, into earnings season would be the expectation. Have we seen bearishness? Not yet, other than indicators going all over the place. Let's now have a look at Bitcoin. So I say Bitcoin weekly still is the key. Weekly close above 50 is what we're looking for the bull side. Volume is clearly coming out of this, but I liked yesterday's close. I got to say, look at this closure point. We have a bullish hammer here on this daily. Now, we haven't had very much follow through. So you'll say, Tom, it did get higher. It should have kept going. I like to break it down to a percentage. So I take this candle, I break it down to a percentage. I might take 15% of that range, add that to the top, And if I'm not going to wait for a close, I wait for it to go momentum slingshot by 15% of this candle, and it's less likely for me to get a bad entry. So we are looking for a new high here. I'd like to see this thing above 33,000 kind of 400 by the close. If it is, you know what? I'm going to go bullish. I think that's bullish for BTC for sure. And I would love that to be countered by this nasty whale chart here. So are the whales downgrading their shorts? Not at this stage, but imagine if we see bullish movement there and then at the same time this ticks down. If that's ticking down and we've got that hammer and we've got the follow through, I would say that's fairly bullish for Bitcoin. It's something I'm looking for, and of course that will flow through to all the other coins. Quick reminder, you've got a whole bunch of information coming out on Thursday and Friday session. Of course, you've got the Fed Chair Powell testifying pretty much on the market open, ET, 9:30 a.m. And then you've got the next day, you've got USD core retail sales and retail sales month on month. We will be covering these on the channel. Please remember to subscribe. We'll be opening 1 hour before market open today. So we'll, of course, be there for all of the action and for Friday as well. So come and join us, subscribe, and we hope you're enjoying the content. Bye for now, guys.